the internet was a massive technological revolution. And I think you'll see that with time, with AI and all these areas. So we don't want to miss out on that entirely. But from a public market investing standpoint, we got to manage that risk, govern the portfolio accordingly. And that's what the process is all about. This is the Realize Your Wealth podcast by Aretec Wealth. We want you to be wealthy. We want you to feel wealthy. We want you to realize your wealth. All right, here we go. It's Friday. We're back. We've got summer. Summer is in the air. I don't think it's officially summer yet, but we got a bit of a heat wave here in the city. Markets. Thankfully, markets in the last couple days have been bouncing back, which is nice to see. But what's going on? What's happening today in your world, Greg?
Yeah, a lot of excitement on our end. Obviously, we have the SpaceX IPO, which we're going to be talking about today. Start of the World Cup was yesterday. Canada's playing today at 3 in Toronto, so that's also super exciting. We also have the Aretec barbecue tomorrow, so no shortage of excitement over here.
Oh yeah, barbecue. We got to just telling Greg about a new picnic table we put together for the barbecue, which was a bit of an ordeal, but we got it sorted out. Only to say I'm probably not the one who should be building patio furniture.
Yeah.
Got other skills, but what's happening in the World Cup? Can you give us a high level analysis here, Greg?
Yeah, I mean, I'm probably a little biased, but Canada's they're playing their first game today, and they have a good chance, I think, of making it out of the group and kind of making some noise in the knockout stage. So I think this is their second World Cup. 4 years ago, I think they were just more happy to be there. It's the first World Cup, but now being on home soil, and their team is actually quite good. So it should be fun and exciting. Even if you're not a soccer fan, it's kind of like the Olympics. The whole country can kind of get behind the team and kind of follow them along for hopefully a few weeks here, not just a week or two. So regardless, it should be fun. So
that's exciting. That's awesome. I'm sure everyone will be tuning in some form this afternoon, or lots of people will be. So that's awesome. That's exciting. So yeah, look, getting into markets and portfolios, we definitely had a bit of a bumpier week. Little bit of what felt like a growth scare was happening. I think that was a lot on the back of the conflict in the Middle East and everything happening there. And then in the last couple of days, we've got a nice little relief rally where markets took off on the back of some, I guess, renewed peace deals or peace talks. So some of that drama and conflict in the Middle East seems to be easing, which has been good for portfolios and markets. But probably the bigger thing hanging over that is kind of a interesting topic, if nothing else, a sort of a fun one, is this SpaceX IPO, which is all over the news, all over the headlines. So we thought we might unpack that a little bit. We're early in the day, so it's not trading yet or doing anything at this point. But we figured we'd give our view on SpaceX and see how that relates to our portfolios, our strategy, our thinking, and hopefully provide some insight into the wild world of this IPO.
Yeah, IPOs are interesting. On the first day of trading, they don't trade like the regular market does. So to your point, Will, it hasn't actually started trading yet. But what it's set to do, it's set to be opening at 1.75 trillion market cap. It's set to go well above that, north of $2 trillion, making it one of the largest companies in the world. So I guess just from a high level, Will, what are your initial thoughts, just given the sheer magnitude and all the hype and demand around SpaceX?
I mean, look, it's an exciting story, right? It's about innovation and growth, and it's about the future. So I could see where all that excitement and hype and optimism is coming from. The piece of it to remember from an investment standpoint is that they're going public to raise capital, and the objective is really to sell those shares and raise as much capital for the company and business as possible, and it creates some liquidity for the early investors and early early founders. So usually, this is when we touched on it last week. Usually, when you see an IPO and the IPO season coming, it means the market has been doing pretty well and is at a optimistic, a high point in that cycle. Oftentimes, when the IPOs start rolling out, though, it's not something that's happening early in the investment and technology cycle. It's happening later. So, from an investment standpoint, it's something that we've said to clients to be cautious with. I mean, certainly the story when you talk about space exploration and defense and AI and all these things, and you've got Elon Musk is supposed to be a trillionaire now, and he's just unbelievable. All those things just add to the excitement and the story. From an investment standpoint, I would be cautious. I think our standpoint on it is let's just see what happens. It's going to show up in index funds and ETFs, and it's going to ripple through some various areas in the market. But if you look at IPOs historically, most of these after a year are on average historical numbers are down something like 50%. I may have these stats wrong, and of course, there's always the unicorn and the one outlier that doubles or something like that, or more off the initial IPO price and keeps humming along and creating value. It's really astronomical though when you start looking at the valuation of this and how I don't even think you can really give it a valuation, but even the price relative to sales and all these other various metrics, it's priced for unbelievable growth, priced to perfection. So I don't think the odds are in your favor that it just keeps going up from here post IPO unchecked. But then again, I might be eating my words even by the time we're watching this video. So we will see.
Well, I think one of the interesting things about this IPO is that it touches a lot of different areas. So it's SpaceX, AI, defense. Like it has a lot of applications, all kind of threaded together. I guess one of the challenges with these IPOs is it's not uncommon for when it starts trading for the price to go up 20-25%. I think that's a lot of the risk and challenge for investors is that when they're getting in at very, very, no pun intended, astronomical, to take their term, prices and valuations, which I think is something to be mindful of.
Yeah, something like this is going to be a lot of speculation, and it's really not. It's not something you can trade on fundamentals, and you really can't even trade it on technicals at this point because there's no price history, there's no trend, there's no indication of supply and demand. It's speculative. So I mean, you could see something even today, like you could see it go up massively and it spikes, and there's traders jumping in and pushing the price of it up, and then something quickly changes and it turns down and goes south. And that's not uncommon with IPOs. I think they want to see it pop initially, but if it pops too much, it means that it was priced incorrectly. However, in this case, I think this is the only IPO, at least from what I heard in history, that the founder priced himself. So it wasn't the investment bankers and the underwriters who were finding the right price for SpaceX. It was Elon Musk who named the price. So that makes it interesting as well. So it's just one of these growth stories. I think it's a sign of the times. Even if just letting it settle down a little bit and seeing, okay, how's this trading? Even waiting for some reporting on it, right, and see how the market responds overall. And if it's something you want to hold for the long term, and if it winds up being a company, your next Amazon or something along those lines, there's nothing wrong with buying it early, just not right off the gate and when it initially goes public.
Yeah, so given that, Will, like for investors, it's probably at this point, probably just wait, let the dust settle, let the excitement, let everything just kind of come back to a little bit of a normalization. And then once we get a little bit of a track record, or once investors get a little bit of a track record, you can make a little bit more of an informed decision, because right now the decision seems to more be based on hype and demand as opposed to actual fundamentals and technicals, which is what our portfolio is grounded in.
Yeah, and look, there's no shortage of hype on SpaceX, and it is a good story, and There's massive growth potential, and I would also say even SpaceX fits a lot of the themes that we've been talking about even for the last couple of years, whether it's military, defense, cybersecurity, all AI related, all these things. It's right on the forefront of growth, and so I think some of the ETFs, especially the defense and aerospace ones, likely will pick up some exposure in that. I know like our NASDAQ exposure in the portfolio is going to pick it up. So you're going to get some indirect exposure. And my feeling is that the markets are watching this very carefully. And I think there will be some correlation certainly between markets and this stock now and IPO, just given the size. And so if SpaceX starts to gain a ton of traction and shoots up, probably going to be good for markets. If it starts selling off and it gets repriced, that's probably going to be an indication of sentiment, and it might be more of a bad sign. So I think you're going to get enough indirect exposure either through ETFs and indexes and capital markets and sentiment in general that you don't need to go and buy this thing this afternoon whenever it is at one or 2 o'clock at 30% over the Elon's pricing.
Keyword Elon's pricing. I guess the interesting thing about this IPO, Will, as opposed to other IPOs, is that this one is so large and so big. It's going to naturally, to your point, make its way into index funds, the NASDAQ. And, we talked about aerospace and defense, some of the AI ones, where some of these smaller IPOs, because they're not big enough, they're not really going to make their way into some of these more broad-based ETFs. But this one will, and relatively quickly from what we're hearing.
Yeah, and look, that for sure is going to create demand. So there's institutional broad-based demand, because if and when it winds up in the NASDAQ, like every single index has to go and start buying it. And markets at the end of the day, as much as maybe investors want to think they're driven by fundamentals, markets are really driven by supply and demand, which is why you can get a story like this where the excitement, the hype, the optimism, the future vision create a ton of demand. There's limited supply of these shares. They've only carved out some of the company, some of the overall market valuation, are putting it out there to raise capital. So the fact that you've got this one story that everyone wants to own, everyone wants to be a part of, that's pushing massive demand on the position with minimal or limited supply, and generally that's supportive of higher prices, but not forever, because these things go in patterns and cycles, and when the optimism and the excitement and the euphoria gets too high and too irrational, things can turn and go the other way. So this is one, I think, again, probably enough indirect exposure through markets, through ETFs, through the indexes. No need to run and buy it. And if you did, I think it's one you'd want to size that position appropriately. It's not, you don't want to buy so much SpaceX that you're going to lose sleep at night. I think it's a fun one where you could put a small portion of your portfolio in, understanding that that's going to be probably a little bit of a rodeo and a wild ride for you.
So given where we are just in the market cycle with AI, interest rates, inflation, given that we're seeing SpaceX, we're seeing some more IPOs set to come out later this year, OpenAI, Anthropic, are there any just broader challenges or risks that you see investors facing in this sort of environment right now?
Yeah, look, as the cycle continues, as it develops, and you see these IPOs happening, you see more and more excitement. I think markets can turn, right? If you get some sort of, that's even what we saw in the last week, and look at bond yields and interest rates. If you get some sort of growth scare, some sort of inflation scare, I think probably the simplest picture to paint is look at what happened in 2022. There was a ton of excitement coming out of the COVID lows through 20 and 2021, and that lasted probably until late 21, early 2022. All of the COVID type stocks, technology stocks, work from home, and anything related to that, video technology, all of that was incredibly explosive. There was IPOs that went like crazy. There was lots of capital being raised in that year and a half or so, kind of post COVID, back half of 2022 through 2021. And then once 2022 hit, you had that inflation scare, that interest rate or inflation shock, interest rate shock. And it was that total growth scare where technology companies, NASDAQ, I may have the numbers peak to trough, but I feel like the NASDAQ probably went down something in the magnitude of 40 to 50%, and more volatile stocks, more speculative stuff. Probably put SpaceX in that camp as being a more speculative type name, got hit a lot harder. So that's what happens when you get further along and later in the cycle and things get more overextended. There's more euphoria, more of the excitement and irrationality. Prices get pushed higher and higher. The thing is, this can go on longer than we think, right? I don't have a crystal ball here. My crystal ball is no clearer than the next person. So markets could keep humming along at this rate for longer than you think. But the longer this goes on, the more likely there's going to be a shock, a growth scare, something that turns that high growth area of the market over. And so I think having the right diversification, the right balance across the portfolio, the right positioning is important to navigate this type of landscape. At the same time, we don't want to be missing out on the technology and the AI and the future-based story. I just don't think you want to be too heavily concentrated towards that.
So just given all that, Will, and just to kind of come full circle here and tie this back to our portfolio and how we're positioned right now, how are we thinking about the markets? Is there a little bit more of a balance between the growth and the value? Are we leaning one way or the other, or what are we seeing out there?
Yeah, I mean, look, I think there's a good balance for the most part where new money and new investments have been going is more so towards the value area, more so towards dividend areas, more correlation, say, with like the TSX, which is your old-fashioned businesses and commodities base and financials and industrials and just real businesses, real earnings, real cash flow, dividends, those sorts of areas, as opposed to where there's more hype, more speculation, growth market. Certainly not as much towards NASDAQ and technology names. I think that makes up more than its fair share of portfolios and markets. So it's not necessary in this environment to go and load up and be too overweight in tech, because I think that's where a lot of the risk is. So the focus, at least for this year, has been a little bit more on real assets, real businesses, real earnings, cash flow, all those things. But again, it doesn't mean that technology story, that growth story is over yet. We've seen that as example with AI, with semiconductors. I mean, the future certainly looks bright. And even when you look at a story like the internet going back 20, 30 years, really at this point, 25, 30 years, yes, market-wise, public markets, these things are going to go through their cycles, the whole ebb and flow, but the internet was a massive technological revolution, and I think you'll see that with time, with AI and all these areas. So we don't want to miss out on that entirely, but from a public market investing standpoint, we got to manage that risk, govern the portfolio accordingly, and that's what the process is all about.
And just to that point quickly, we've seen this year technology has still done well. Semiconductors have still done very well. But what we've maybe seen more this year is just more volatility just throughout the week. And a lot of that has to do with obviously headline risk, but inflation, interest rates, those stories are starting to creep in more, which doesn't mean we can't own them, but we're just maybe seeing a little bit more volatility in those areas than we are used to.
Yeah, I mean, it's always a crazy market, but it feels like this year it's been a lot choppier than normal, and that could be late cycle behavior for sure. But I mean, we stick with the process, we stick with the strategy. We want to have really an all terrain type of portfolio for clients. It's going to navigate through any sort of environment, and at the end of the day, we want you to be wealthy. We want you to feel wealthy. We want you to realize your wealth. That's what we're all about. That's what Aretec Wealth is all about. So enjoy the warm summer weather, and we'll be back with everybody next week.